Imagine trying to reconcile millions, literally millions, of financial transactions by hand.
Oh, it's daunting just thinking about it.
Right. Not just the sheer volume, but think about the endless spreadsheets, that kind of looming dread of a missed error. An error that could cost your company, well, millions, or even worse, lead to regulatory headaches. It's just a logistical and, frankly, financial nightmare.
It really is.
Well, today we're diving deep into exactly how organizations are moving past that, how they transform that manual nightmare into a streamlined, accurate process.
Yeah, moving away from the firefighting.
Exactly. Our mission here is to demystify Oracle Fusion Cloud EPM's account reconciliation, or ARCS. We're drawing insights straight from its administration guide.
Strip from the source.
We're going to uncover how this powerful tool doesn't just help companies, tick the compliance box,
Right.
but how it fundamentally shifts their financial close process, slashing risk and unlocking really critical insights.
Insights you just couldn't get before. Not easily, anyway.
So whether you're prepping for, a high-stakes meeting or just trying to catch up on the latest financial tech, or maybe you're just genuinely curious, this deep dive is your shortcut to truly understanding how this all works.
Yeah.
We'll have some surprising facts, some practical applications, and hopefully cut right through the jargon.
Yeah, I think the true power here isn't just the automation, though that's huge. It's that profound shift, like you said, from reactive firefighting at month end
Right.
to proactive continuous financial verification. Imagine moving from that frantic manual hunt for discrepancies to a system that actually flags potential issues before they even hit your balance sheet. That's really what we're talking about.
Okay, let's unpack this then.
Yeah.
What exactly is account reconciliation, ARCS, and why is it such a monumental, big deal for businesses of all sizes?
Okay. So at its core, account reconciliation, ARCS, it's a system meticulously designed to manage all those reconciliation processes.
All of them.
Well, pretty much. Your standard balance sheet reconciliations, yeah, but also more complex things like consolidation system reconciliations and, other reconciliation processes you might have.
And the key problem it solves.
The paramount problem is ensuring financial statements are accurate, making sure that those account balances truly reflect the company's financial position.
Okay.
Think about it. It handles critical accounts like cash, comparing your main record, the general ledger, or GL, to your actual bank statements.
But vital.
Absolutely vital. Or accounts payable and accounts receivable, matching that GL data to detailed subledgers. Those are like mini ledgers tracking individual invoices or bills.
Right, the nitty-gritty details.
Exactly. And it even helps analyze the aging of those receivables. It also covers fixed assets, comparing GL to subledger, doing roll forwards, and even the more nuanced stuff like prepaids, accruals, provisions, reserves.
The tricky ones.
The tricky ones, yeah. Documenting their net composition, justifying their quality, it brings structure to all of that.
Okay, so how does it actually work? What are the pieces?
Right, so to really get it, we need a few fundamental building blocks. First, periods. Simple enough, that's just the unit of time a reconciliation covers, like say January 2025.
Makes sense.
Then you have profiles. Think of these as like blueprints or precursors to the actual reconciliation.
Templates?
Yeah, exactly. Templates. They hold all the configuration settings, the how and when reconciliation should happen. Then a snapshot of that profile gets copied to a period to create the actual reconciliation. So that's your specific account reconciliation for a given period. It pulls in the account balances from a source system, which is just a data repository like your ERP.
Your main accounting system, maybe?
Could be, yeah. And it applies the properties defined in that profile and its associated format.
So, tying it back, what does this all mean for you, the listener? What's the takeaway?
Well, it means moving beyond just basic accuracy, though that's fundamental. It's about achieving really unprecedented efficiency and rock-solid accuracy, even in incredibly complex financial operations. It's about taking millions of data points and making sure they all line up quickly and correctly. It transforms what used to be a major bottleneck into a streamlined, reliable process.
Okay, so that's the what. The system itself?
Yeah.
But a powerful system is only as good as the people using it, right?
Absolutely.
So let's pull back the curtain a bit on the human element. Who are the key players in this intricate financial dance? How do their roles make sure everything stays on track?
Good question. Within ARCS, different user roles have very specific responsibilities, and how they interact is absolutely crucial for process integrity. Keeps things from slipping through the cracks.
Makes sense. Who's at the top?
At the top, you generally have the service administrator. Think of them as the central controller, maybe the architect of the system in your company.
Okay.
They set the rules, create security filters, manage the application roles. They're the ones ensuring compliance and policy adherence across the board.
The rule makers and enforcers.
Kind of, yeah. Then there's often a power user. They have elevated privileges, more than a standard user.
Like an admin's assistant?
Sort of, yeah. A trusted assistant is a good way to put it. They often help with crucial tasks like updating profile attributes, maybe managing reassignment requests if someone's out of office.
Okay. And the folks doing the day-to-day work.
Right, the everyday users, or what the guide calls workflow users. This is where the bulk of the reconciliation work happens. First, you have the preparer.
The person actually doing the rec.
Exactly. They're the ones providing the justification for the balances. Could be a balance-to-balance comparison, an account analysis, maybe variance analysis. They enter the nitty-gritty. The reconciling items, the balance explanations, attachments, comments.
All the details.
All the details. Then comes the reviewer. They're responsible for the approval process. And the system can handle multiple levels of review, up to 10, actually.
10 levels, wow.
Yeah, for really complex or high-risk areas, you might need that. They can flag transactions, or they can reject reconciliations, sending them back to the preparer for correction.
And there's some intelligence there too, right, with risk.
Yes, that's a really neat part. Risk conditions based on balances or content, maybe trends can actually trigger dynamic approvals. Meaning a higher risk reconciliation might automatically require a higher level review, someone more senior perhaps. It adds an extra layer of control dynamically.
Smart. Any other roles?
Yep, there are also commentators. They can provide additional comments on reconciliations. Maybe someone from a related department needs to weigh in. And finally, viewers who, well, as the name suggests,
Just look.
just look, exactly. View-only access.
It sounds like a very well-defined system of checks and balances. But I wonder, are there common pitfalls here? Like, do these distinct roles ever create bottlenecks if, communication isn't perfect?
That's a great point.
Or does the ARCS have features to smooth that over?
It does try. While the system design, with its built-in checks and balances, is strong, you're right. The biggest bottleneck often comes down to communication outside the system.
Ah, the human element again.
Always. That's why features like the comments and the attachment sharing within the reconciliation itself are so critical, and why administrators really focus on training users to use those collaborative aspects. The goal is for the system to facilitate communication, not just, process data.
That makes perfect sense. Okay, we understand the players now. Let's zoom in on reconciliation compliance itself. How does a reconciliation actually start its journey? How does it get created? And what are the different ways a preparer can actually, prepare them?
Right. So reconciliations are typically created for a selected period, say January 2025, for all the active profiles whose frequency matches that period. Monthly profiles get recs every month, quarterly every quarter, and so on.
How do you kick that off?
You can create them in a few ways. Directly from the period screen or the profile screen in the user interface, pretty straightforward. Or, for service admins and power users, they can use the EPM Automate utility.
For batch creation.
Exactly. Great for automating bulk tasks. But a really critical administrative step here is checking for missing reconciliations.
Why is that critical?
Well, imagine you created the first batch of recs for the month, but then someone created a new profile for a new account after that. Or maybe a profile was missing some required info initially. This check ensures completeness, makes sure nothing gets missed.
Got it. Covers the gaps. Okay, so they're created. Now, how does the preparer actually tackle them? What are the methods?
Okay, so ARCS offers 3 core methods. It's basically about how the preparer explains the numbers, depending on the data they have. First is balance comparison.
Sounds straightforward.
It is. That's when you're reconciling a subledger balance against a general ledger balance. Think accounts payable GL versus AP subledger. Second is account analysis. This is used when there isn't a subledger balance to compare against. Maybe it's an accrual account. So the preparer needs to explain the general ledger balance from scratch, detailing the items that make it up.
Building it up from the components.
Precisely. And third is variance analysis. This compares the current month-end balance to a prior period-end balance. Could be the previous month, previous quarter, even prior year-end. The preparer then explains any significant variances between those periods.
So comparing against history.
Exactly. But here's where it gets really efficient. It's not just about manual preparation. The system leans heavily into automation.
The auto-reconciliation stuff.
You got it. Administrators can configure auto-reconciliation rules. Think about accounts that are always zero balance, or accounts with no activity in the period, or maybe balances that fall within a really small acceptable tolerance range.
Things you don't want people wasting time on.
Exactly. The system can automatically prepare and sometimes even review those reconciliations based on these rules. It frees up your skilled analysts to focus on the complex, high-risk stuff.
That seems like a huge time saver.
It absolutely is. And the rules can go further. They can be set to automatically submit or even approve reconciliations if certain conditions are met, like the unexplained difference being zero.
Wow. Okay, so what about supporting documentation, audit trails?
Crucial. So users can manage attachments. These are files linked right to the reconciliation or maybe to specific comments or transactions within it.
Like invoices, contracts?
Could be anything relevant, yeah. Invoices, contracts, supporting schedules. Preparers can add attachments to the overall reconciliation. Reviewers and commentators can add attachments, but only to their specific comments.
Makes sense. Are there limits?
Just common sense file type restrictions like no executable files.exe for security. Importantly, attachments remain editable until the whole reconciliation workflow is completed.
Right.
And you can add the same file to multiple reconciliations at once, which is another nice time saver.
And comments. Yep. Users, preparers, reviewers, commentators can manage comments anytime the period isn't locked. Administrators have override power. They can delete any comment if needed, and comments can be set to carry forward to the next period's reconciliation.
For continuity.
Yeah, if it's an ongoing issue or explanation, you don't have to retype it every month.
What about the actual items used to explain differences?
Those are the transactions within reconciliations. The specific line items the preparer adds to make the balances agree or to explain the composition of an account analysis balance.
How they get in.
They can be copied from a prior reconciliation, which is handy for recurring items. They could be manually entered, of course. Or they can be imported from a file, maybe from another system.
Flexible.
Very. And there's even a specific feature for amortizing or accreting transactions. Think prepaid expenses being amortized over time or unearned revenue being accreted.
Right. Things that change predictably.
Exactly. The system helps manage that calculation with options like straight line or based on actual days or even custom calculation methods. It feels like all these methods and features really combine to give you a very complete toolkit.
That's the goal. It provides a comprehensive yet still flexible approach. It adapts to different account types, different levels of complexity.
Okay, that covers individual reconciliations really well, but you mentioned earlier sometimes you need a broader view.
Yeah.
Across cost centers or departments.
Yes, absolutely. Beyond just reconciling individual accounts, ARCS supports group reconciliations.
How does that work?
Imagine you load data at a very granular level, maybe company account cost center. But for the primary reconciliation, you only need to sign off at the company account level, grouping across all the cost centers.
Okay, consolidating it up.
Right. Group reconciliations let you do that. The huge benefit is you can reconcile at that summary level, but you still have the ability to drill down into the underlying subsegment details, the cost centers in this example for analysis.
So you get the summary view, but the detail is still there if you need it.
Yeah, exactly. While individual recs just have their reconciliation balances, group recs have an extra detail balances tab showing you all those child balances that roll up into the group. It gives you both perspectives.
That sounds really useful for analysis. Okay, so reconciliations are prepared, maybe grouped, reviewed, approved. What happens then? How do you close the books, so to speak?
Right. So once the work for a period is winding down, you manage the period status changes. Periods start as opened, obviously, so work can begin.
Okay.
Then they can be closed. Closing prevents new reconciliations from being started for that period, but it allows any already in progress ones to be completed. It's like a soft close.
A way to stop new work coming in while finishing up.
Precisely. And finally, periods can be locked. Locking prevents any further changes to any reconciliations for that specific period. It provides that finality, that audit-proof seal.
And can you ever go back?
Administrators can reopen periods if absolutely necessary. Maybe significant errors found late or some critical data arrives after locking. So there's flexibility, but it's controlled.
Okay, that makes sense. So reconciliation compliance seems to handle that crucial period-end cleanup and validation really well.
Mm-hmm.
But what about the daily grind? The high-volume transactions, the constant flow of cash, bank transfers, maybe credit card feeds. This is where transaction matching comes in, right?
Exactly right. Transaction matching, or TM, is a crucial complement to reconciliation compliance. They work together.
How so?
TM's goal is to simplify those incredibly complex, high-volume reconciliations by focusing on matching individual transactions much more frequently, maybe even daily.
Instead of just at month end.
Right. You load transactions from one or more data sources, maybe your bank statement file and your GL cash transactions. You match them using predefined rules. You identify any exceptions, the unmatched items, and then you explain and resolve those exceptions.
So it's like doing your bank rec continuously.
That's a great analogy. Yeah, it's happening much closer to real time.
Okay, what are the key bits of transaction matching?
All right, some core concepts. Match types are central. They define how the matching process works, which data sources are involved, what rules to apply. A single match type can often be used for multiple similar reconciliations, which is efficient.
Reusable rules.
Exactly. Data sources are just the systems you're pulling transactions from. Could be your ERP, maybe a data stream feed, even just a flat file.
Got it.
Match rules are key. They determine how transactions are actually matched. The system supports flexible relationships, simple one-to-one matches, but also one-to-many, many-to-one, even many-to-many.
For things like lump sum payments covering multiple invoices.
Precisely. And tolerance limits. These are absolutely critical for real-world matching because, let's face it, numbers rarely match exactly down to the penny.
True.
So tolerances can be numerical, like allow a difference of up to $10, or percentage-based, maybe within 1% low or high tolerance. You can also set date tolerances, like plus or minus 3 days, to account for timing differences in posting.
Practical stuff.
Very practical. Transactions then move through different transaction statuses as they're processed. Unmatched, suggested matches, where the system thinks it found a match but needs confirmation. Matched and confirmed adjust, which is used for handling single-sided adjustments like bank fees.
And automation plays a big role here too, I assume.
Oh, massively. The magic is an auto match. You set up the rules, you set the tolerances, and the system automatically processes the massive volume of transactions. The goal is to leave only a small percentage, the true exceptions, for manual investigation.
Reducing the noise.
Exactly. It dramatically reduces the manual burden. And the system also provides robust features for searching transactions, filtering by all sorts of criteria, exporting results, and even the ability to split a single transaction if part of it matches and part needs separate handling.
Okay, this is where I think the real power emerges, that synergy between transaction matching and reconciliation compliance. How does bringing these two together fundamentally change the game for finance teams?
It's a game changer, truly. The integration offers really significant benefits. It fundamentally minimizes the time and effort needed for the period and reconciliation compliance process.
Because you've already done a lot of the work.
Precisely. Because the matching and verification is happening continuously, or at least much more frequently, throughout the period via TM. Unmatched items, exceptions, they get identified and hopefully resolved as they occur.
Not just in that frantic week before the close.
Exactly. You're not discovering a mountain of issues on day 25. It shifts the whole process from a stressful sprint at the end of the month to more of a managed marathon throughout the month where you're constantly clearing hurdles.
That sounds much less stressful. Are there any tricky bits with how they interact, particularly around closing periods?
Yes. There are some important nuances in period handling differences between TM and RC that you need to understand. In TM, there's a concept called the locked through date. That's basically the period end date for the latest locked period in reconciliation compliance. If you try to perform TM actions, like creating an adjustment, with an accounting date before this locked-through date, the system will give you an error.
Protecting the locked history.
Exactly. Then there's the close-through date, which is just the end date of the most recent period where reconciliation is closed, but maybe not locked yet in RC.
Okay.
Now, here's the tricky part. Certain TM actions, like deleting TM transactions that were part of a match, or unmatching a set that included an adjustment, or editing the accounting date or amount of a matched transaction if these actions are done on transactions linked to a closed reconciliation in RC. And the transaction's accounting date falls between that lock-through date and the close-through date. It can actually cause the reconciliation in RC to automatically reopen.
Whoa, wait. So doing something in TM can reopen a reconciliation I thought was finished in RC?
It can, under those specific circumstances. Also, simply importing new TM transactions into a period that's already closed in RC will automatically reopen the reconciliation unless the period is fully locked.
Okay, that's crucial to understand.
It really is. It raises that important question. How do you manage the delicate balance between wanting that real-time transaction resolution in TM and needing the finality of a closed period in RC? ARCS gives you the tools, but understanding these interactions is absolutely key to managing your close effectively and avoiding surprises.
Definitely something to plan for in your process design.
Okay.
Okay, so we have all these transactions, balances, reconciliations flying around. How does the data actually get into the system? And maybe even more importantly, how do you make sense of it all once it's there? Get the insights out.
Right. Data loading and reporting. Absolutely crucial. For data loading methods, you've got several options depending on your needs and technical setup.
Like what?
You can use the main account reconciliation user interface, which is good for importing pre-mapped data files manually. For users comfortable in Excel, SmartView allows loading transactions directly from spreadsheets into reconciliation compliance.
Handy for ad hoc adjustments, maybe?
Could be. For more automated, repeatable tasks, the EPM Automate utility is the go-to. It's a command line tool, great for scripting regular data loads.
For the techies.
A bit, yeah. And then there's data integration, which uses a simplified UI, often called data exchange. This is really powerful, especially for incremental data loads using what's called a merge mode, meaning you only load the changed balances or transactions since the last load, rather than doing a full refresh every time. It's incredibly efficient, especially for daily or weekly updates from source systems.
Makes sense. Any rules for the files themselves?
Oh yes, there are some key import file format rules you need to follow for smooth loading. Files generally need to be in CSV format. There are required columns like short description, reconciliation account ID, transaction date, amount currency,
Yeah.
the basics.
Standard stuff.
Pretty standard. You need to handle special characters correctly. Like if you have a backslash in your data, you need to escape it with another backslash. And the column headings in your file need to precisely match their expected English names in the system.
Details matter.
They really do for imports. Okay, so data's in. Now, visualizing information is key to making it actionable, right?
Absolutely. Rows and rows of data aren't insight.
Exactly. ARCS offers different views, list views, pivot table views, and chart views. Users can customize these views for reconciliations, transactions, profiles, even alerts. You get incredible flexibility to choose columns, group data like group reconciliations by preparer and status in a pivot view to see workloads.
Nice.
And apply filters to narrow down what you're looking at.
So you can slice and dice the data.
Totally. And going beyond those standard views, administrators and power users can create custom dashboards. In a special design mode, they can combine multiple chart, list, and pivot views onto a single screen.
Tailored command centers.
That's a perfect description. Examples are really powerful here. Imagine a dashboard showing open reconciliations by account type with balances. Maybe a combination chart showing the status and the dollar amounts involved all in one visual.
Where the big money is outstanding.
Exactly. Or think about a burn-down chart to analyze reconciliation performance. This tracks things like due dates versus actual completion dates, maybe alongside the total balances being reconciled over the period.
So you can see if you're on track.
Better than that, you can see trends. Are reconciliations getting done earlier this month? Are certain teams always late? Are high-value recs taking longer? It guides process improvements in a really visual way.
Powerful.
Another great one, visualizing unmatched transactions by organizational unit, perhaps in a pie chart. Instantly see which department or business unit has the biggest pile of exceptions to work through in transaction matching.
Highlights the hotspots.
Right. And if you connect this back to the bigger picture, these visualization tools, these dashboards, they transform that raw data into actionable intelligence. They reveal trends, bottlenecks, outliers that would just stay hidden in massive spreadsheets otherwise.
It's about seeing the patterns. Okay, dashboards are great for that interactive analysis. What about more formal, maybe auditable reports? Stuff you need to print out or send to auditors.
Good point. For that, ARCS offers a suite of predefined reports. These cover both reconciliation compliance and transaction matching, things like balance by account type, reconciliation performance analysis, rejected reconciliation reports, transaction aging analysis. Lots of standard needs covered out of the box.
Covers the basics.
It does. But for more specific, tailored needs, administrators can create custom reports. This involves defining the precise data query you need, designing a template usually using RTF-rich text format, which allows for highly customized layouts like adding logos, specific formatting.
Like building your own report from scratch.
Pretty much. You define the query, design the template, and combine them into a report definition. You can get very specific. And these custom reports can also be grouped together into report binders for convenience, maybe grouping all month-end closing reports together.
Okay, this sounds incredibly powerful, covers a lot of ground, but with all this critical financial data,
Mhm.
it also sounds like something you need to protect carefully.
Absolutely.
How is it all secured? And what happens when users inevitably hit a roadblock or have a question? How do they get help? And then there's the long-term view, managing the system itself, moving data between environments, cleaning things up.
Yeah, those are all critical administrative functions that keep the system secure, responsive, and efficient over time. Let's start with security.
Okay.
Security in ARCS is multi-layered. It really starts outside ARCS with the identity domain administrator, the person who creates the actual user accounts and grants initial access to the EPM cloud environment.
The gatekeeper.
Kind of. Then, inside ARCS, the service administrators and power users manage the application-specific security, the roles, user groups, and a really powerful feature called teams.
Teams. How do they work?
Teams are great for simplifying user management. Instead of assigning the preparer role, the reviewer role, the commentator role to dozens of individual users for a set of accounts, you can create a team, put the users in the team, and then assign the team to those roles for the relevant profiles.
Much easier to manage groups.
Way easier, especially when people join or leave or roles change, you just update the team membership. And beyond roles and teams, security filters can be applied at very granular levels, restricting access based on specific profile attributes, organizational units, even controlling who can see which reports.
Layered security.
Deeply layered. Okay, so what about when users hit roadblocks?
Yeah, inevitably someone gets stuck.
Right. ARCS uses a system of alerts for this. Administrators first create predefined alert types. Think of these as templates for common issues, maybe missing bank statement or intercompany out of balance, or even system issue.
Standardizing the problems.
Exactly. These alert types define what critical information needs to be captured for that issue and can even pre-assign key personnel responsible for resolving that type of alert.
Okay.
Then, when a user actually encounters an issue, say, the bank feed failed or they need information from another department, they create an alert based on the relevant alert type. They provide the specific details, link it directly to the reconciliation or transaction they're working on.
So it's context specific.
Right. And the alert type can even be configured with specific questions for the user to answer, ensuring all the necessary information is captured right up front for whoever needs to resolve it. It streamlines the whole issue resolution process.
That sounds much better than email chains.
Way better. Okay, then lifecycle management, moving stuff around, keeping the system clean.
Yeah, like moving from test to production.
Exactly. For migration strategies, you have a few options. For wholesale environment moves, you can export full database copies called snapshots. There's a specific category for ARCS called Financial Close Management Artifacts. You export the snapshot, download it, upload it to the target environment, and import it.
Copies the whole thing.
The whole relevant part, yeah. But you also have the flexibility to migrate individual artifacts, maybe just a few updated profiles or a new format or some custom reports without doing a full snapshot restore.
More surgical updates.
Right. And again, the EPM Automate utility is absolutely key here. It can automate both snapshot migrations and the migration of individual artifacts, making the whole process much smoother and less error-prone, especially for regular updates.
Automation is your friend.
Always in EPM. Then, crucial for performance and sometimes compliance, archiving and purging data. Systems fill up over time.
Got to clean house.
You do. In reconciliation compliance, you can purge old periods and related objects that you just don't need actively in the system anymore. For transaction matching, which often has much higher data volumes, you have a few options.
Okay.
You can archive matched transactions. This saves specified sets of matched transactions, along with their supporting details like comments or adjustments, into archive files. These can be stored offline for reference or compliance, often done right before purging them from the live system.
Keep a record, then delete.
Exactly. Or you can do a simple purge, which permanently removes matched transactions from the live application based on a specified age, say Anything older than 2 years?
Just gone.
Just gone from the application, yeah. There's also a combined archive and purge option, which does the two steps together.
Any tips for purging?
Yes, definitely a best practice. Purge transactions outside of peak business hours. Why? Because the system usually has to lock the relevant match type while the purge is running, so you don't want to disrupt users trying to perform matching.
Good practical advice. Anything else on the admin side?
One last cool thing, connecting cloud EPM environments. Service administrators can set up connections between ARCS and other Oracle Cloud EPM services your company might use, planning, financial consolidation, and close tax reporting.
Integrating the suite.
Right. It allows for more seamless navigation between them, often with single sign-on. And you can even export unique direct URLs for specific cards, tabs, or even subtabs